We've gotten some news over the past couple of weeks that you've seen Saudi Arabia dropping a huge amount of U.S. Treasuries, China dumping U.S. Treasuries, the largest dumping of U.S. Treasuries in 14 years, Japan dumping U.S. Treasuries. And just so our audience understands this, U.S. Treasuries, of course, are the fuel for the American government, right? I mean, we sell U.S. Treasury bonds. I remember my grandmother telling me U.S. Treasuries are the safest investment, right? So you sell a U.S. Treasury and then someone's trading money for that, and then you'll get it money back later with interest, interest on that. So China will buy U.S. Treasuries and then get paid back later with interest. Well, now China, Saudi Arabia, Japan dumping U.S. Treasuries, and they're stocking up on gold. So we're seeing a huge shift, the likes of which we haven't seen in nearly 20 years. What do you see on your side?
Well, the central banks last year had a record amount of gold purchases. So they purchased a quarter of all of the gold mined for the year, which we haven't seen that since the beginning of the 1970s. So there was a huge shift from selling precious metals 10 years ago to accumulating now. The first quarter of this year, the report just came out last week, that they're on pace for even a higher record for the first quarter. So the central banks have not let up. They are accumulating gold at a record pace. These are not day traders. They're not hedge funds. They're not buy today, sell tomorrow. Typically when they purchase, they hold for 10, 15, 20 years. So in my business, we look at those central banks as critical to the demand side of the equation on what's happening with the gold price. What we project in the future is what's going to happen in the gold price. Because they purchase it, they hold it. We know that's not coming back on the market. So any increase in demand on that additional fixed supply out there is going to move up the prices substantially. And I think that's why you have Bank of America and some of the others out there calling for gold in the $2,700 to $3,200 range, because they see the central banks purchasing. But Clayton, you brought up, the country selling these treasury bills. Today, Janet Yellen came out, this is on Yahoo Finance, and says Americans should anticipate a decline in the US dollar as the world's reserve currency. The US dollar saw an 8% decline in its share of global reserves in 2022. 8% doesn't sound like a lot. It's a huge amount. When you have other countries reducing trade by 8% using the US dollar, it's big news. And I always look for tipping points. Where's the tipping point? The BRICS nations are trying to get a new currency to compete against the US dollar. It's getting an extremely warm welcome from Saudi Arabia and other countries out there that want to join. And if this 8% turns into 20% next year, then the US dollar, in my opinion, is doomed.
It's an unbelievable admission from the Treasury Secretary to say that, that what you're watching now is U.S. dollar dominance in decline. And, hopefully when people watch this show and they hear us talking about this, moving into hard assets like precious metals, that it's a wake-up call for people.
Call Lear Capital at 800-601-3557 or click the link below for your free gold report and gold investor guide. Also ask how you can get up to $15,000 in bonus gold with a qualified purchase. Don't wait till it's too late. Call now or click the link below.